Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Thursday edition of Benzinga's PreMarket Prep. Spencer Israel, Joel Elconin, Dennis Dick, jam-packed morning this morning. Lots of earnings to discuss. A rather interesting earnings call with Tesla last night that I'm sure Dennis and Joel have some opinions on. But we also want to talk about the S&P futures getting hit this morning on what appears to be news out of Iran. So we'll get to that as well. And also three guests on the docket. 8:15 is our first guest. That will be Marc Chaikin. At 8:35, we are joined by Rod Casilli. He's a trader, and he also works at Collective 2, which is a small fintech brokerage. And then at 9 a.m., we are going to be joined by one of our favorite guests, Gordon Johnson, Managing Director of the Vertical Group. I'm sure he was on that Tesla call last night, and he's going to break down his thoughts on that report for us at 9, Gordon Johnson. In the meantime, Joel, what's happening in the S&Ps?
S&Ps just got blitzed as we were talking since the 7 o'clock hour. Speculation here, the Iranian foreign minister says he will not renegotiate nuclear deal. So that could definitely be weighing on the markets. Had a little rally overnight. 26.36 and a quarter is your pre-market high. Pre-market low is getting lower as we speak, 18 even. Folks, keep an eye out for last week's low at 11 and a quarter. Sure seems that's where we're heading. Bitcoin futures trading up $105 at 92.20. Crude up 6 cents at 67.99. If you want to look at a daily chart, look for support. Look at that $67 level. Again, it bounced off it yesterday. Gold in the green by 12.50, 13.18.10, finding support near the psychological $1,300 level. And silver up above 16.50, up 22 cents at 16.59. Good morning to you, Dennis, and we got some action this morning.
Yeah, there's some movement here. S&Ps, I came in and just turning on my computer is about 6:45 this morning, and we're flat. It looks like we're going to be a quiet day, and we just started leaking after 7 o'clock, and we have kept leaking and leaking significantly here now, down 15 handles in the last hour basically here. So I'm not sure if that Iran headline, this other stuff. The market is spooked though, and I'll tell you, you look at these charts and there's just so many stocks breaking down now. I had a Reuters reporter call me yesterday near the close asking, why the sell-off towards the end of the day. There's a lot of sell imbalances. It's telling me there's nervous institutions out there, a lot of nervous institutions. And you know why? You start looking, at some of these stock and some of these performances here. I mean, we have a lot of stocks breaking down to new 52-week lows in a lot of different sectors. I mean, check out Procter & Gamble and AT&T, supposed to be defensive. Not anymore. Holy cow, these stocks are getting absolutely annihilated. I've talked about, getting the shot at Procter & Gamble at 68. It looks like I'm going to get that chance. The thing is $70 here now, Joel, after being 90. It's just annihilation pretty much across the board on everything as of late, except Apple, obviously, yesterday, which had a really nice day. But besides Apple, when you looked at everything else, it got crushed. And again, same thing I said to the Reuters reporter, same thing I said on the show yesterday. If you would have told me that Apple was going to be up $8 and the overall market was going to be way down and every other stock was going to be down, including a lot of the tech stocks, I would have said you're nuts. But that is not the case. That's what happened yesterday. You had a majority of stocks trading hard in the red, and Apple obviously bucking the trend and showing green. So this morning, it's just nervousness. I mean, this market is spooked, and you get a headline even about anything to do, a macro headline can drive us down. Like exact opposite of what the market used to be when you had the honey badger market of the last 3 years bull run, when it would shrug off every scary headline. You get one little headline here, like this headline out of Iran this morning, if that's the case, and the market's got an excuse to sell off, and that's what they want. They want an excuse to sell the stocks, and they get it again here this morning.
Earnings season. We thought after the volatility, the breakdown of the February lows, we thought a good earnings season, would be the
and it's been good.
I know.
The earnings have been good, yet the stocks keep going down. That's telling you something. it's telling you, man, there are some people who want out. There's a lot of people still sitting on a lot of profits from the last 3, 4, or 5 years, and they're bucking them. And you know what? I think we're going to test those February lows. Now, we're straight down here for the last couple of days. You're going to get bounces. I never like selling in the hole. But I think bounces, I said it yesterday, I'm going to say it again. This is not buy the dip anymore. It is sell the rip. It has been that way really for the last couple of months. But we went and tested the February lows in March. They held. I think we're going to test them again. But you know what? I always say no such thing as a triple bottom. If we go down there and test those February lows again, I think we take them out.
Okay. All right. 220.
Bearish on the
Dennis
show.
Oh my gosh, I better
the
hide
ship is taking on water.
Yeah, but you're going to pull one of these CNBCs on me. You're going to say, well, I'm short-term bearish, but I'm long-term bullish.
I'm not doing that. Oh, yeah. Well, yeah, I'm always long-term bullish. That's why I own stocks. But we got traders. I got the trader hat here on right now, and it says, sell the rips.
All right.
The investor in me says, buy the dips.
You're psychotic. 8 minutes left here for our first guest. We haven't done one earnings report, Dennis. We got to get going here.
We got to do the Tesla report.
Let's go with Tesla.
Dude, give us the numbers, and then we'll talk. And it was just trading flat. Give us the numbers, Spencer.
All righty. Q1 EPS, $3.35 loss. That beat the estimate. They were supposed to lose $3.58. Who really cares about that, though? Sales, $3.4 billion versus $3.33 billion. Okay, not super interesting one way or the other. They do see their Q3 and Q4 GAAP net income as being cash flow positive. They reported the Q1 production for the Model S came in at just under 25,000 cars. For the Model 3, just under 10,000 cars. They delivered about 22,000 Model S and X units for total deliveries for the quarter of 29,997 cars delivered by Tesla for the quarter. But that was not really the story, was it?
The stock was trading flat and actually traded up a little bit on those numbers and just kind of hanging out flat. And then the conference call began. And this conference call went south in a hurry. And Spencer, I just want you to read that transcript I sent you yesterday, because Musk went full on, like just cutting analysts off and just got rude. And it is not pretty. Read actually the transcript from the call with those two analysts, because this is kind of funny, but kind of scary at the same time.
All right. I guess I'll read you. We have a lot to say about this, so I'll just read you the screenshot you sent me. This is Tony Sacconaghi. He's with Bernstein. He's got a pretty good reputation on the street. Where specifically will you be in terms of capital requirements? And this is a question that was addressed to the CFO. Elon interrupts that exchange. He goes, excuse me, next. Boring, boneheaded questions are not cool. Next. Okay. On we go to RBC. He starts asking about Model 3 reservations. And
is this Joseph Spack?
Yes. And then there's a long pause. And then Elon goes, we're going to YouTube. Sorry, these questions are so dry, killing me. And then they went to YouTube and they took about a dozen questions from a YouTuber who had tweeted at Elon Musk asking if he could ask questions. So basically,
that is unbelievable.
So I was thinking about this a little last night and some more this morning. So in Elon's defense, those questions probably were boring and but
important.
Right. Okay. So
the best questions are boring.
So one of the analysts even apologized on the call for being myopic, which they are. I mean, Elon Musk does not care about the last quarter. Elon Musk cares about the next 10 or 20 quarters or beyond, or the next 10 or 20 years. He doesn't care about the state of the business today. He cares about the state of the business, going forward. And so he doesn't want to talk. He doesn't want to talk about it. Which
how's the cash flow? He doesn't want to.
Right. He doesn't want to talk about it. Which I understand, but also
really want to talk the financials.
Right. Which
they're not pretty.
I understand it. Right. They're not good, but at the same time, that's what these calls are for. They're for boring, myopic, short-term questions. Yeah. How is the business right now? And I think you saw the reaction to it.
And the reaction to those, Spencer, I was watching as Tesla, the conference call began, and it tanked. When he cut those two analysts off, that stock tanked 15 straight bucks. So it went from 300. It was trading happily in the 300 area, kind of flat on the call, straight down to 285. And now we're at 281. We're even weaker here this morning. It is completely because he cut those analysts off and called them questions boring. Funny thing here is Joseph Spack, so obviously was on the call, and that was one of the analysts got cut off. I just noticed this morning he cut his price target on Tesla from 305 to 280. So he punished Musk a little bit for cutting him off. He actually cites in his note that he lacked answers to investors' questions and just basically said that the conference call was odd.
The one more thing that Ben Callow from Baird, he was the one that basically apologized for being myopic, but you got to ask his questions, and he asked about. He asked a question and then about Model 3 sedans and about giving an update on the progress because it could help the company's stock. And Elon's answer, and I'm reading this from a Bloomberg article now, Elon's answer was, I think that if people are concerned about volatility, they should definitely not buy our stock. I'm not here to convince you to buy our stock. Do not buy it if volatility is scary. There you go. And that was his answer.
I saw a headline fly by, and I'm not sure my Twitter account. And it just shows you how the media can take stuff out of context, though. And I think it was Market Watch, but I don't want to say who it was because I can't remember, but I saw it go by. And the headline was, Tesla tanks as Musk says, don't buy my stock. I get completely taken out of context. Who wrote that? Technically, he was talking to the day traders. If you don't want to be, if you want to just be my stock for the short-term volatility, don't buy my stock.
Technically,
so it wasn't like he said don't buy my stock altogether. He wants the long-term investors in there. So brutal headline.
Yeah.
Anyways, that just shows how much the media can take stuff out of context.
He did technically say that, but it was not in the context.
Completely out of context.
Right. Okay.
So anyway, I don't have a problem with that. Yeah, I agree. If you're in long term and you're worried about the little short term intricacies, he's not worried about that. So I kind of like that part of it. But he can't be rude to these analysts who are covering his stock. I mean, cutting them off, calling the questions boring, bonehead questions.
Here's what Elon is all about challenging the status quo and the institution. So he doesn't really care that he may or may not have offended some people on this call or pissed people off. He doesn't care about that. He is all about just being disruptive, and that's why his fans like him. Believe me, I am no Musk fanboy, but that is why his fans like him, right? Because he doesn't care about doing things the way they've been done, before. He just doesn't care.
Well, you know what? He's the Trump of the business world. This is a good quote. A.G. Penner saying this in the chat here right now. A.G. Pennypacker. That's a funny name. He says Musk is suffering from the Trump syndrome. It's totally true. I mean, Trump came in and, is doing nothing by the book there either. And, everybody's kind of having a hissy fit over it. Same thing, here with Musk. He does nothing by the book. And their Twitter accounts, both of their Twitter accounts should be banned, for the good of Tesla stock and for the good of the country, because we know they say a little bit too much when they get happy with their Twitter. But anyways, it makes the world exciting. So, it's something for us to talk about here for 10 minutes on our show. Joel, you've been quiet in the background here. What are your thoughts here as Musk goes full on crazy on the conference call?
I think that your quote that you just made there could make national news that Musk and Trump should suspend their Twitter accounts will be better for the country. That's a pretty bold call there. Nice trading action here in Tesla, both sides. If you're shorting that psychological 300 level, you took some heat because it went well over that. I'm just going to look at the dailies, and I'll just give you an area that I think is very important for Tesla today. And that's the 277.25 area. It was flanked by a low at 76.5 and a low at 78.46. So still $3 away from there. That could be a big support area for it to hold. Also, I'll let y'all do the math and figure out your 50% retracement from 245. Let's call it 310. Oh, wow. 309.50 was the high. So figure your 50% retracement. That might come in the 275, 280 area as well.
All right. I'm going to bring on Marc Chaikin on the fly. We're not going to break right now. Marc Chaikin joins us every other week. He's the founder of Chaikin Analytics. Talking to us. He can pretty much cover everything, which is why we like him. Marc, are you there?
I am, Spencer, and I've done some special field research for you guys.
Oh, tell us. All right.
I've come down with the mother of all colds. The temperature in Philadelphia has gone from 38 to 91 in 2 days. Everybody is getting sick. So this morning I looked around for a generic drug manufacturer because I was down at the CVS buying anything I could. And there it is, Teva Pharmaceutical. Chaikin Power Gauge turned bullish after a year about 2 weeks ago, and they report better than expected earnings, up 6% pre-market.
Nice.
So there's your special scoop.
Boots on the ground. All right. So
yeah, old-fashioned Wall Street research, guys.
So I assume you bought the product.
I bought some generic drugs.
Is it working?
Everything.
Is it working? Yeah, that's the question.
You can hear it's not working yet.
Oh, you sound okay to me, so maybe it is starting to work a little bit better for you.
That's my Barry White voice. So.
The Teva chart is starting to look a little bit better. You know which one I always trade that, and I'm just curious, why we just talk Teva. I often, talk about Valiant too, because they make a lot of generics as well. And the VRX chart is starting to look a little bit more lively. What's the power gauge saying about VRX?
Let's see. It's bullish. It's been bullish since November when the stock broke out on a positive earnings report at around 14.5. So you had a run up to 23, a really big pullback, and now you're coming on. So it looks okay, but this is a tough stock.
This is tough
to get people to buy into this story.
Mark, this is a tough market here too. And last time you were on the show, I would say the market was in about the exact same spot it's trading here now. But me and you both were looking at this potential W pattern in the S&P, saying, maybe this can play out, maybe this can work. The W isn't looking as pretty as it once did, though. So we're actually probably about, it's about the same price, but a lot has happened since then because we tried to rally. And now we went through an earnings season with pretty good earnings, but the stocks aren't responding that well to it. And besides Apple, which had obviously a nice response to their earnings reports, we've seen a lot of stocks sell off on good reports here. What are your thoughts here now when you look at the S&Ps? What's the power gauge also saying about the market overall?
Well, Chaikin money flow has been negative on the SPY, and what that means is we've had a pattern of weak closes. I actually think that the W bottom is legitimate, except that so many people are watching the 200-day average, which right now is at 26.12, and we're precariously close in the early futures trading. I think that the bull market is still intact. Market's bent but not broken, but I've been saying for 2 or 3 weeks, I have this nagging feeling that before we get going on the upside, we got to get out of earnings season because, as you point out, sell on the news rules right now. But I also think we're going to break the 200-day and scare the Jesus out of people. And that's when we put in the bottom. And that could be anywhere from 2470 to 2500. Could be a test of 2533, which is the intraday low. In my gut, it's too easy. We've tested the 200-day 3 times. So that does speak to your point that the W is a little bit precarious here.
Let's jump over to a couple other individual issues here.
I think I stunned you there. I'm sorry.
Yeah, a little bit there. Actually, no. When you get 3 people on the call, you're wondering who's hopping in. So I gave Joel a chance, but he was too late. So I just jumping in. I keep asking questions the whole time. I love having you on, Mark.
He was shorting futures contracts, I guess.
Oh, probably. He's busy trading over there. So Tesla, TSLA reports earnings there last night. They did okay on the report. It was hanging out, and then the conference call was a circus show. He cut off a couple analysts, called their questions bonehead, and the stock took a nosedive. It's down $20 here now. What's the power gauge saying about Tesla?
It remains bearish. We've talked about it so many times on this show. I think that you had a great opportunity on the rally above 300. Of course, that's hindsight, but we've been saying that consistently. Can only short this stock on rallies. I question their viability when the window closes and they can't raise money. And remember, a couple of big Wall Street firms have bearish ratings on it. Goldman Sachs has a bearish rating, so I don't think they can participate in a financing round. So my view is they're burning cash. I don't care if they burn 20 cents less or 20 cents more. This company has production problems. They're facing unbelievable competition. I mean, just you name it, BMW, Audi, Volkswagen, Mercedes-Benz, the Japanese car makers, General Motors. How can they survive? Someone might buy them, but I don't know at what price. But I've always said drive the car and sell the stuff.
I just don't get it and I haven't got the story for a while here, and I've been dead wrong all the way up because I just don't understand how they can have a market cap that's higher than General Motors. and you got this company that makes a hell of a lot of money. They're going to make 21 electric cars, they said, by like 2021 or something, or 2022. I mean, they're full on the electric car market here as well. You get a nice dividend there, and the stock just hated. It's funny how this street, just continues to give Tesla a pass, though, despite, obviously a lot of issues that you just cited.
Well, you haven't been wrong. The high on the stock is 380 over the last 12 months back in June, and then again in September, it's trading at 280. So I would say you've been right. It's just been very hard to make.
Well, I didn't like it since like 150 though. Well, so I didn't like it at 150. I didn't like it at 200. I didn't like it at 300. I didn't like it at 380. I didn't like it at 350. I didn't like it at 280. So I've been wrong sometimes.
Friend is your friend. Yeah. Why don't we talk about some stocks where you can actually make money on the long side, like the refiners and the retail gas stocks. This is a place where I have real conviction.
Let's do it.
Well, tell us why.
So, basically the shackles are off. The export possibilities are extraordinary. So you got a stock like Marathon Petroleum, MPC. They just announced a takeover bid for Andavir. I am so thrilled with that because it used to be called Tesoro, and we knew how to pronounce it. I don't know if it's Endeavor or Andavir, but it's going to be part of the largest refiner retailer in America with a huge presence in Mexico. And I don't think people realize that Mexico can't handle its own energy needs because of aging infrastructure. So MPC is just going to be a giant. It was 83 just a week ago, traded down to 71. You got to buy this stock on weakness. This is just a gem. It's the largest U.S. refiner, and I think you got to go with it. And by the way, when the dollar broke down after the Fed notes, guess what happened? Energy rallied, and the price of West Texas crude closed above 78 for the first time. This is big.
We're on the line with Marc Chaikin of Chaikin Analytics. Marc, we got a question in the chat here from TT Mac, and his thoughts on gold with, just looking at that in conjunction with the call that you made on the S&P and the broad market.
I've never been a fan of gold. So, just as you're bearish on Tesla from 150, I think there are better ways to play, a weak market. Gold to me is unexciting. It's in a trading range from 124 to from 1240 to 1300. I don't think you're going to make money long term in gold. People are now buying Bitcoin instead of gold to anticipate a financial crisis. So much as I'm not a huge fan of Bitcoin long term, I think if you want to play a financial crisis, you might want to look at Bitcoin instead of GLD. Although we love the ability to buy gold in an ETF like GLD. Van Eck has done an extraordinary job there.
Do you run the power gauge on Bitcoin?
No, but people are using Chaikin money flow to trade Bitcoin. Coinbase is one of the indicators, that you can use to analyze it. It actually works. That's the beauty of an indicator. It's been around for 35 years. Of course, I created it in the womb. So, it's got prenatal characteristics.
You created it when you were 5 years old?
Nice.
Yeah, amazing, isn't it? Math genius.
Let's talk here about the crude oil market. Holy moly, how many times are they going to let you buy this at the $67 area? $66.92 was your low yesterday, $66.86, and then 3 or 4 other lows surrounding that area. So for me, above 67, you're good to go north here, but really a quiet trading range. What is your reading on crude?
Well, by the way, I think I said 78 before. I meant 68. Well, crude is very often the inverse of the dollar. So you had a pullback in crude as the dollar went above its 200-day average over the last 5 days. Its dollar's now pulled back a bit. I think that there's strong worldwide demand for crude, and once these trends get going, they always go to an extreme. So that's why I'm focusing on the refiners. And I also think you've got some opportunities based on the strength in crude in stocks like EOG and Chevron, the larger oil and gas producers. And this is just a trend that I think is going to continue for quite some time. It's the strongest industry group here. And interestingly, the energy ETF XLE had underperformed until about 6-7 weeks ago. So there's still a catch up, and it's still not at a 52-week high. So lots of opportunity in the energy stocks here.
All right, we've been on the line with Marc Chaikin from Chaikin Analytics. Marc, a pleasure as always. Feel better and have a good rest of the week.
Thank you, guys. Always a pleasure for me.
Thanks, Marc.
All right, folks, we got to talk about this IMTE. We always get a crazy stock in here, and we have a bunch of crazy traders in our chat that like to get down and dirty in this one. And the news. What news me on this one?
I don't even know.
Was there news?
I don't even know if there was news. This is one of those crazy low float plays, right, where there is just low float and crazy. I'm sure there was something. There was some headline, but
there's lots of headlines probably today.
Yeah. But
I don't know what the fundamental catalyst that kickstarted this yesterday, but just to recap it here, stock was trading just happily around $2, basically no volume. What was the volume last like 3-4 days before yesterday, Joel?
Yeah, it was like 100 shares on Tuesday, right?
Oh, 147.
It traded 147
on
shares
Monday,
of a $2 stock.
Did not trade on Tuesday. Dennis, it did not trade on Tuesday.
It didn't trade on Tuesday at all.
No.
So, okay, and then all of a sudden, it just blasts off in orbit, goes from $2 to 40, what did it go to? $41 yesterday. Tanks at the, towards the end of the day, closed at $21.95. Now it's up another, if we look at it here today, it's up another 15 points. I mean, it's up 70% here in the pre-market, $37. When the dust settles on something like this, you ask me a year from now, I think it's back at $2, for real. I know people say I'm nuts, a $36 stock's going to go to $2. I say 1 year from now, it's $2. But I don't know what the path it's going to take to get there is. This thing could be $100 today. I'm not even joking. It could be $20. It could be $100. It's going to be wild. It's going to continue to be wild. This is just go to the casino, put it on red or black, and hope for the best, because this type of stuff, and like I said before, if you've got a strategy and you've got a niche for trading this kind of stuff, by all means, continue to do this. If you're consistently making money trading penny stocks, continue to do it. But if you are new to trading and you are trying to get your feet wet by trying to learn this type of stuff, how to trade, I've been trading for 18 years professionally. I have traded more than 1 million trades, million physical trades manually, plus I had all my automation going. I've made millions of trades, and I can't trade this kind of stuff. This stuff is just way too hard. This is the hardest stuff to trade because it's just completely random. It's going to have wide spreads. Right now, the spread is 36.80 to 38.22. You're talking about $1.40 spread on a $36 stock. You're talking about a 5% spread. So basically, you're just trying to get in. You're almost paying 3-4% to get into the thing. 3-4% in, 3-4% out. That stuff starts to add up. So anyways, it's very difficult to trade this kind of stuff. But again, by all means, if you're making money with it, continue to do it. It's not for me, though.
And I think I can't feel my Facebook maybe took a little flyer on this one. He probably can't wait for this thing to get open so he can dump it. You had a high yesterday. I'll just give you yesterday's high, 41.26. Just got, cut in half by the close. I'd say I'd be keeping an eye on that 41.26. In fact, 38 is 37.5 is good enough for me, up to 41.26 if I had this thing long. It's a newer company. 2 million traded yesterday. There's going to be some more volume trading today. We'll just wait for that volume to dissipate and for it to go back down.
Look at this, though, and integrated. So there was a headline that came out at 12:41 yesterday. Actually, no, this headline came out at 12:41 on May the 1st. So there was a headline, a press headline. It says Integrated Media Technology Limited selects PCG Advisory Group for Investor Relations and Corporate Communication Services. That's a very fancy way, in my opinion, of saying we're going to promote our stock. And I don't know if they sent this out to a whole bunch of people on the promotional side, but this sounds to me like a pump and dump. So they, for whatever reason, maybe they started promoting it yesterday. I don't know if people got this in email, but when you get a headline like that, that sounds like a promotional scam. So you got to really make these things look good. But that headline looks like a promotional scam to me.
To me, it sounds like they just hired they hired a PR firm. Cool, good for you.
Yeah, that's what it sounds like. But they make it sound like that. But that means they want to promote their stock. Even in this press release, they say, where is it? Market through. Oh, I just saw it. Talk for a second. I'll find this again.
All right.
We're moving ahead with expanding our investor awareness in the U.S. through PCG Advisory Group. They're promoting their stock. And we've had Alan Brockstein come on multiple times talking about the marijuana sector. And when they start promoting, that's when he's like, he don't like the heavy promotion because it's all about, it's just trying to pump their stock. And maybe, it's funny, it comes out on the 1st, and all of a sudden, the big move here, if we look, happens yesterday. So I guess maybe we got to watch when they hire these PR firms. Maybe the big move's going to come, but it didn't trade anything really. Well, okay, no, it didn't even trade. So yesterday, right, it didn't trade on May the 1st at all. So maybe it was halted. Was it halted on May the 1st?
No,
and then just came out of the halt?
I don't think so. It was halted like 10 times.
Why did it not trade at all, or just had no interest?
It was halted like 10 times yesterday. On certain
and those are volatility halts.
Right, no, I know.
Was it halted for anything on the 1st?
I don't believe so. No.
Anyway, be careful with this kind of stuff. That's all I'm saying. If you're looking at this, I'm going to invest in this thing right now, I think you're looking to lose all your money. So if you're looking to trade this thing and you're good at trading it, go ahead. But I'm just saying I'm out on this. This stuff is crazy. And I think when the dust settles here, we can listen to the show a year from now. And I think this thing's going to be back at $2 or $3 in a year.
Dennis, I want to congratulate you. You no longer have sold the old-time low in Snap.
So I don't know if you want to listen to anybody that sold the old-time low in
not anymore.
Snap.
And I told you it was going to trade 11. It traded 10.96.
Why did we short it on that? You were right, Joel. We could have got 38 cents on that.
It was. But trying to rebound today. Let's see if buyers, they're going to have to step up at the $11 area. More than one day for me to get an interest in this one, trading up 9 cents. Let's do one more earnings report here. Let's go to Spotify. What a volatile stock. What do you got for me, Spencer?
Yeah, the first earnings report since the IPO, Q1 EPS of €1 and 1 cent loss versus 115 in the same quarter, a 115 loss in the same quarter last year. Sales 1.139 billion euros and missed the estimate just by a hair. 1.14 billion was the estimate. They ended the quarter with 170 million monthly active users. That is up 30% on a year-over-year basis, and 75 million premium subscribers, up 45%.
Oh boy, there's some analysts that are regretting their moves here. You've had you had a buy on the second with a $200 price target, and then a couple initiations at overweight, buy, and buy, and another initiated a hold. But it had a big run up. Analysts were looking for a much better report. Got all the way up, man. I hope our listeners took my advice and sold at the all-time high.
We don't give advice.
Okay, we don't give advice.
I always have to correct you.
169 even. That was your former all-time high. You got to 171.23, closed at 170, and now all those gains and then some are taken out. Pre-market low 150.85, 150. You better hope that holds.
That's a big number.
Yeah. Two lows in that area as well, Dennis. The April 18th, you had a low of 49.56. 25th, 50.06. After that, it drops off to 146 even. So 150, good number there. Potential support in Spotify. Spoos on the rebound, Dennis. Only down 475. The buy the dippers come in again.
All right, 834.
No, they do, but this is a sell the rep market now, so those buy the dippers don't work as well as they used to.
I stand corrected.
We are going to take a quick break now and grab our second guest, Rod Casilli. He's with Collective 2. He's also an options trader. We'll be right back in a moment with Rod.
30 out here.
Welcome back, everyone, to Benzinga's Pre-Market Prep. Spencer Israel, Joel Elconin, Dennis Dick on now with Rod Casilli, who is joining us out from the Bay Area. So it's really early where you are, Rod. Thank you for getting up with us. And explain that setup behind you.
So what I have is I used to have these 6 screens, and essentially I just got tired of all the electronics and cords and things to handle them. So, I'm a trader, I'm a YouTube guy too. So I just saw some guy that had a setup like this, got a little envious, decided to go out and get these 2 42-inch high-def 4K monitors, mount them on the standing desk here, and that's what I stare at 12 hours a day.
That seems like a good way to go. So, Rod, it's been, I don't know, about 10 or so months since we last had you on the show. For our new listeners, explain a little bit about what Collective 2 is, because it's a pretty unique concept to me.
Yeah, Collective 2 is an online marketplace that connects mostly retail independent traders with investors. We do that in kind of a marketplace scenario in which great traders from around the world connect their brokerage account to our platform. We track their trades in real time. These are walk forward, live, out of sample, real trades. And then investors can look at all the statistics associated with that trading and decide if they want to connect their own brokerage, self-directed brokerage account to those traders. So it's a social trading and investing marketplace.
So you can essentially say, I see Joe Schmo trading leverage ETFs and he's killing it, and I want to do that too. I can just connect his strategy to my portfolio.
Yeah, not only can you do that, but you can also do that in a completely self-directed way. So you can say, I only want to trade half of that size, or I want to run my own stops and targets, or I want to just follow the strategy the way it's done. So it's not sending your money to somebody else. It's not letting someone provide you any kind of trading advice. It's simply automated signal service, but you remain in complete control over how you want to trade it.
So does the trading take place like on your on each individual's brokerage account, or how does the technical part of that work?
Yeah, it does. And thanks for having me on, because I'm going to do a little shameless plug for something new that we just come up with. But until recently, almost all of our assets were actually at Interactive Brokers. Most people are probably familiar with Interactive Brokers. And again, you would have an account at Interactive Brokers, and you would connect it to the C2 platform, and then our auto trade sync technology would follow that strategy in your own account. You'd see that trade in your own account. Again, you can act on it in any way you want. But just this week, we released in public beta our own brokerage offering called C2 Broker. And what makes it different is that if you're following a Collective 2 trading strategy, you can trade any stocks and options strategy completely commission free. And we don't mean like we're going to mark it up to $9 or $10 plans later, or we're going to pull a Robinhood kind of thing. This is completely commission-free trading, 0 commissions on stocks and options if you're following a Collective 2 trading strategy. So we're hopeful that that's a compelling thing. I mean, low cost, no cost ETFs and race to zero for fees has been around for a while. But how do you know what to buy? How do you know when to buy? We really look at C2 as a new emerging asset class of alternative investments, and you can trade those commission-free.
So if there's no commissions on the C2 strategies, how do you guys make money?
There's actually no commissions on the C2 broker transactions,
Okay.
Commission transactions.
Okay.
However, there's also no platform over on Collective 2. So I want to make this very clear. This is not a replacement for regular brokerage or competitor, those guys who are stealing from the rich and giving to the poor. This is, you have to be a paid customer over on Collective 2, and there are fees associated with that. There's strategy fees. These people don't work for free, so they set a price for monthly access to auto trade their trade signals. Okay. You have to pay for that, and we also have auto trade licenses. So make a clear distinction. We're talking about commission-free trading commissions, but there still are costs associated with Collective 2.
Who is the ideal user of C2?
That's a great question. So we have a 2-sided marketplace. The ideal trade leader, someone who might want to publish their trading signals and make additional money from their portfolio, is someone who's good, someone who has been battle tested and is passionate about the markets and has alpha and edge. That's not easy, and is committed and understands that it's an acorns to oak trees kind of thing in trading. Those are ideal trade leaders. When it comes to investors, it's generally you're going to have to. We recommend a larger size account. These are more active, alpha producing, and volatile types of trading strategies. So the ideal customer is someone who might have $25,000 to $50,000. That's the risk part of their portfolio, and can look through a variety of different trading strategies and decide to connect a portion of their overall portfolio to a trading strategy on Collective 2.
So, Rod, there are a lot, or I've heard of several platforms who offer a similar type, not the exact service, but the similar theme of connecting people, traders with other traders and seeing their strategy. But I don't know of any platforms where you're able to directly trade with that strategy. Is that your key differentiator, or am I missing something?
No, I think it is. I mean, we've been, Collective Two's been around for about 15 years. What we do is not very easy. I mean, the most difficult part, I joke a lot of the time, if it was easy to trade the market successfully as it is to drive someone to the airport, we'd be bigger than Uber, right? So there has been social trading models and things, mostly in Europe around Forex, but they have more of a gambling nature to them. They're just, small accounts and things like this. We're really building an expert community of traders in the marketplace and looking to offer this investment asset class to investors. So, we're pretty unique. I don't know if my co-founders want me to be saying this, but I really wish there was more competition. Come at us. Show us that there's edge and alpha in trading. I mean, that's what everyone in Benzinga is here to learn, is to how to beat the markets. And there are traders out there doing it. And most investors got full-time jobs, and they rather let somebody else try to do it for them.
So I'm curious, Rod, because last we spoke, volatility was not a thing in the markets, and now it's back apparently. So I'm curious the reaction you've seen on from the traders on your platform just this year.
Yeah, great question. I was listening to Joel, Dan, and all of you guys talking this morning. I mean, me personally, for my strategies, this has been one of the greatest years ever. I mean, I have market timing strategies. January was like a dream. I can't say no that I caught the absolute top before that rollover right around my birthday. But yeah, I mean, finally, things are going up and down, and more active traders with strategies, with edge, with alpha, with back-tested ways of adjusting to different market regimes are doing well. Our guys got hurt too, hit quick. That was a quick, that February was brutal for a lot of certainly short volatility strategies, but we have started to see a lot of our traders begin to turn with this worm here and feel more confident shorting at certain levels, whether that's stocks, ETFs, futures, or even currency pairs. So yeah, we're starting to finally see it. I mean, for a long time, we had a very bulled up trader base, which was right. They were right to be bulled up. They were right to be selling, at the money puts. They were right to be short volatility. And fortunately, we see a lot of trading strategies that have adjusted quite nicely.
Question here from our chat. Do you have to be on, he said interactive trader. I think he means interactive brokers. Do you have to be on IB to use C2?
No, you don't. We actually support about, in the futures markets, we support a lot of different IBs. So if you're interested in following a future strategy, you have quite a bit of choice. No, you can use, if you like stocks and options, you can use C2 Broker. You can use a company called Auto Shares, which is another low cost broker. So you have plenty of different choices.
And that actually a follow up to that. So all sorts of markets are available, not just equities?
Yes, stocks, options, futures, and foreign currency. Foreign currency is a little hard in the United States since just about every Forex broker's gotten banned or left the market. But if you're outside the United States, you can trade Forex. But yeah, all four major instrument classes.
Any thoughts on adding crypto? I'm only half. Yeah, I'm only half serious.
You don't have to know. It's the most popular request we get. Now, we do support Bitcoin futures, so the SIBO contract and the CME contract have finally gotten a lot more liquid. I've been having a ball with the SIBO contract really all year. No, you'll probably see it from Collective Two very soon. We are, registered with the NFA, regulated by the CFTC. We have to just, we have to be cautious and wait till the regulatory bodies decide how they're going to view these types of assets, and then we'll be ready. I mean, Coinbase and their GDAX exchange is it's pretty darn easy to plug into, and we could certainly offer something in the crypto space.
Last question, Ron, and I'll let you run. But personally, from your trading, what do you have your eyes on right now?
Yeah, so I have a mixture of things, right? I separate my portfolio probably the way a lot of active traders do into longer term, medium term, shorter term kind of stuff. So in the investment bucket, I really like. I'm a little scared because I like some of the stuff that many talking heads like right now. I got a contrarian play going on in General Electric. I don't see how the downside is below 11, and I think the upside is $20 to $30 in 2 to 5 years. I buy puts. Excuse me. I sell puts on that consistently. Buy upside calls. So I got risk reversals going on. I like Bank of America above 28. It's hovering around 30. I think a move to 33 to 35 this year is pretty solid. Like Intel, things like that. On my own trading, I trade the futures markets and more actively with options. And I've been doing a lot of things with options and all the stuff that's releasing. I don't play Tesla or Amazon or those as much, but I've pretty much had some option plays going on in just about all of the big NASDAQ stuff releasing earnings.
You act like it's a bad thing that you agree with some talking heads. Talking heads aren't always wrong. We all have to give them crap, but they're not always wrong.
I know, but that price action in B of A after earnings, Goldman after earnings, Intel after earnings. I mean, you guys were all talking this morning about it's never that easy, but then we're all doing the mind games, right? Well, we all think we're going to break these certain levels and we're going to flush things out, and then it just never quite works out that easily. So I guess what I'm saying is I wish I had more things that are not being talked about in my portfolio than the things that are.
Are you always more of a contrarian trader? Because that's what we talk about on the show a lot. I'm sorry. We talk about trading with a trend, contrarian investing. You seem like you're more of a contrarian trader.
I would like to think I have a variety of different models that work for different market regimes. But yeah, I mean, when you look at screens as long as I do, we're like, we get attracted to the shiny flashing object. That's what our signals go off. And typically that's when things are moving, and they're moving pretty quickly to some key level or whatever. I don't know if I'd like to define myself as necessarily a contrarian trader, but certainly when I'm looking for my longer term investments, yeah, I like to try to be in places that are not necessarily as discovered or popular.
All right. Rod Casilli, he is an options trader. He is also the head of product management at Collective 2. If this sounds interesting to you, you should check out the site, which is collective2 or c2broker.com is the site for their new broker. Collective 2 is the larger platform to connect with other people. But Rod, thanks so much for the time this morning. I know it was early for you, so we appreciate it, and have it going.
Thanks for having me, guys. I appreciate it.
All right.
Thanks, Rod.
Where are we at in the markets, Joel?
We're off the lows by 3.5 handles. Caught a little bit at 26.17. Can't tell you I have anything there, so probably not going to be the low of the day. I'm looking for maybe a little rally up to the close. Our close at 26.27.50. $50.25. That was your low from last week.
Let's go to some. We have 10 minutes before we go to Gordon Johnson. So let's go to some more earnings. And I wanted to hit on one that we discussed on the pre-market show, which is Kraft Heinz. And I know that pains you guys to bring it up, but I'm going to bring it up anyway. Kraft Heinz, because they reported earnings. They did a report yesterday. Let me get the exact number. There we go. After the bell. 89-cent EPS versus an 84-cent estimate. Sales 6.3 versus $6.37 billion. And the stock got a pop after earnings. And let's pull up a 15-minute chart and kind of giving it back.
So let's talk Kraft Heinz here. And I don't know what to say. Like, I put this in my investment portfolio at $60. Thought I was going to hold. I had one good day, and then it's been straight down ever since. I mean, it was a mistake, obviously, and it's continued to drift lower here. Too early on it. I think any rally is going to get sold on this. I think you have people like me that are in this thing happy to get their money back. After hours trading action is telling me the same thing. It got up to the 57 handle last night. It's already given back half of those gains. I would not be surprised if this even gives it all back. Talking as my book here again.
Yeah, our book, Dennis. This is our first stock we're ever in together.
Yeah, we're never in this together. I don't like that I'm in it, but I'm long term. It's giving me a dividend. I didn't have any food stocks, I guess I'm sticking with the long term. But
do you hate that you're in it, or do you hate that you're in it with Joel? It seems like you hate that you're in it with a little bit of both. Okay.
Let's see here. In this one too, and I have not done this too much in my portfolio, and I talked to you about it when it was at 60, and I was thinking of either like writing a call or buying a downside put, because it was going to move off 60. It was either going to go to 65 or 55.
It just sat there too long, you know, that was our mistake. It sat there too long. And I think I even said it a few days before. It sat there so long that it made me scared. But then I had that nice candle. I got to downgrade that one day and then spiked and closed green and then had the next move up. And I was like, okay, maybe this is the start of something in the food stocks. And it wasn't. It was a fake out, and it's still continuing trend straight down.
All right. Wow.
This is a victim, but it's not just Kraft Heinz.
No,
I mean, we talked Procter Gamble, we talked AT&T. They don't want any of these.
What's going on?
Nobody
with
wants
these
3-4%.
stocks, you got to figure what is going on with these stocks. I mean,
they don't want value. They're not interested. The market is not. Here comes a rant. There's not. This market is not interested in companies that make consistent profits. They're interested in companies that are growing the top line. They want to see the top line fly, and if you're not growing the top line, they are punishing you for it. And there is a lot of stocks out there that make a lot of money very consistently. We just talked about General Motors and Ford. Both of them make a ton of money. But it's Tesla they want, because you know why? Tesla's growing the top line. And they think, you know, that the Tesla's worth more than General Motors because Elon Musk is going to change the entire world. Maybe that is the case. And maybe that's going to work out. You know, I've always been a value guy. Value investing is completely out of favor here right now. And all the stocks that I have in my investment portfolio that are value stocks, been dogs here as of late. It's been a rough, you know, couple of months for my investment portfolio. I'm not going to lie to you. You know, I do have stocks like Ford in my investment portfolio. I do have Kraft Heinz in my investment portfolio. I still intend to put Procter & Gamble in my investment portfolio. But I'll tell you, I went through a lot of times where value investing has been out of favor. And Warren Buffett, you know, himself has said, you know, and Warren Buffett stock hasn't done great in the last couple of months either. You know, he's been out of favor a lot of times too. I can remember a headline back in the year 2000. I remember this headline coming out, that value investing is dead and Warren needs to change his strategy. That was the headline on Berkshire Hathaway back in the year 2000 when the NASDAQ flew to 5,000. Everything was about growth. And back then, Berkshire Hathaway stock, which I believe was trading at $40,000 a share. It is now $290,000 a share 18 years later. The NASDAQ is finally back to those highs 18 years later. So I still believe in the Warren Buffett approach. I still believe that in the long term that value investing wins. But right now, value investing is completely out of favor. The tide will turn, though, and I still think in the long run that value investing wins. That's why I'm sticking with some of my value plays.
I wasn't writing articles back then, so you can't.
I remember the headline: Warren Buffett, the value investing is dead, and it was from like something major. It was maybe even like, you know, like a Barron's. I don't know who it was, but they said Warren needs to change the way he does things, or because his style is dead. And that was the exact bottom on Berkshire Hathaway. That was the tech top, and everything, you know, went to hell in a handbasket there. And Warren's approach of buying all these value stocks obviously worked out, because his stock from that point in time, you know, is up, you know, 600 or 700%, and the NASDAQ is basically flat in 18 years.
By the way, next week is the anniversary, 53rd anniversary of Buffett assuming control of Berkshire Hathaway. 53 years, right? 65 is when that happened. Anyway, can we talk about Square? Because that one had a day and a half yesterday. So first things first, before the earnings report, they kind of got Amazon, Square and PayPal and Visa. As we saw a headline from Bloomberg that Amazon is looking to offer discounts to retailers if they use Amazon Pay. That was first. And then we got the earnings report after the bell, which is, and I'll give you the numbers when I get them here on my they just gave guidance, I think is what it was. They didn't report. No, they did report. Sorry, 6-cent EPS, which is in line. Sales 307 versus 292 million. So they beat on the sales. They in line on the EPS. The Q2 EPS guidance was light by a hair. The sales guidance for the quarter was higher than the estimate. They're also raising their fiscal year guidance for the EPS and for the sales.
It got Citron too earlier in the week. Right? Yep. Or last week. Yep.
Yeah, Andrew Leff was on CNBC last night giving his bearish scenario for Square, just saying, you know, that everybody's saying, well, it's a Bitcoin play, but he was, you know, saying that this is such a small portion of their business that, you know, why are we talking as Square as a Bitcoin play? Because it's not a Bitcoin play in his opinion. It's a payment processor. And he says it's trading 15 times revenue, and he doesn't agree with where it's trading. I'll say, though, this market, you know, just has its loved children. And Square still falls into that category here. So on pullbacks, I still think you're going to have people buying Square. It was down to 45 last night, which is huge support for the stock. It has already bounced off that area up to 47. I think if it tests 45 here again, I think it finds support there again. It's one of the loved. It's not a value stock. It's the opposite of a value stock, but it's one of those stocks that just continues to be loved by the street, despite, trading with a ridiculously high multiple.
45 even, that was your after hours low, and you just reached your highest level since there, 47.70. So let's call potential range here 45 to 48 here in Square. The day after the Citron report, it got down to 43.72. It looks like that low is safe for today.
Jump over to a couple other stocks that were in the news here and reporting earnings there last night. Let's go, man, there's so many. There's 252 stocks that are reporting here just today. So a lot of them aren't, headline stocks, but there's a lot of big ones here still too. So where do you want to go, Spencer? We got like 2 minutes.
Kellogg, you want to go there?
Yeah, I'll do Kellogg's because
right.
That goes right along with our whole,
right.
You know what? The food stocks are hot here today. Here's Kellogg's. Stock's been in the doghouse, absolutely annihilated ahead of the report. And it's a little bit of a squeeze here right now. But you know what? What do you say, Joel, when you see a chart like this?
$60.
And overhead supply.
Yeah. Yep.
I mean, how much overhead supply? Everybody who bought this thing is getting some of their losses back here. Same reason like Kraft Heinz. I don't know if it holds. So It's up $2.34. Yes, I think these food stocks have been hit too hard. Yes, it's nice to see them get a relief pop here, but I don't think it's anything more than a relief pop. I don't think this is the start of a new bull run here for the food stocks. They're out of favor, and I think they still remain out of favor. And I think people probably use this pop to sell. What's a high? What's a pre-market high?
Right where we're trading at now, trading at the highs of the pre-market session, 59 even, and that gives you a nice level to lean on the dailies. Your 2-day high is 59.08, so you're opening right into the teeth of that. Also had a couple closes in that area on Monday and Tuesday before you broke down. So getting up, holding 59, you might get a shot at 60.48, but opening right into the teeth of resistance. And let's see how much attention the chat pays. Where is Kellogg headquartered at?
No,
every time they have earnings.
Yeah, even I know that after several years of this, even I know.
Joel asks it every single time they have earnings. But he's a creature of habit, so we got to give it to him.
Every single quarter.
Whereas no one in our chat seems to know.
3, 2, 1.
Well, there's also a slight delay on the broadcast, but I'm just going to it's Battle Creek, Michigan.
Okay.
All right, so let's move on. Let's do Fitbit. This one reported. Hard to believe they're still
Fitbit and then imbalances.
Sure. Fitbit's Q1 EPS 17-cent loss. That was 3 cents fewer than what they thought they were going to lose. So great sales, 247 versus which is in line, 247 million, which is in line with the estimate more or less. They reiterated their sales guidance of $1.5 billion for the year, and revenues down 19% on a year-over-year basis. Not what you want to see.
One trick pony, they need a new trick. I'll leave it at that.
Okay.
Imbalances here. You know what? I don't understand here when I'm looking at the imbalances this morning, what is really the driver of knocking us down 13 handles on the S&P? Because I see a lot of buy imbalances out there, believe it or not. So one of two things are going to happen. Some of these buys are going to flip to sells, or you're going to see this market start to rally. And I think this market might start to rally here. So I'm starting to, not getting bullish here on the market when we're down 13 handles. And still, I still think, where the market's in for a lot of doom here coming shortly. But I think just this morning, if you're trading the open, I think we could get a little bit of a pop here from where we are now. I'll probably be selling the open though if we do that. Coca-Cola, 155,000 to buy. That is significant there. Alibaba, which has been up all morning. It was a Citron bullish pick. I don't know if he's ever had a bullish pick yesterday. But I saw him tweet it out.
BlackBerry.
What's the name? Yeah, yesterday he got bullish there in Alibaba and said that was the one that he liked. 87,000 to buy in Alibaba, so the party continues here for Alibaba. AT&T, which got annihilated yesterday, 46,000 to buy. Also, Pfizer has been in the doghouse. It's got 43,000 to buy. I'm looking at General Electric, 159,000 to buy. It's trading in the green, actually. Square, 168,000 to sell. We know it's got disappointing earnings, so that's why that's trading down. But Verizon, 47,000 to buy. ExxonMobil, 23,000 to buy. Chevron, 29,000 to buy. These are relatively small buy imbalances, but they're buy imbalances. So I'm not really totally sure what the market is seeing here this morning. I was down 11 handles.
All right, 9:01. I'm going to take a quick break, and I'm going to hopefully be able to grab Gordon Johnson from the Vertical Group, and he's going to talk to us about Tesla. So we'll be right back with Gordon. All right, folks. Was not able to reach Gordon Johnson. Unfortunately, we're gonna looks like we're gonna have to talk to him later today or tomorrow. We just spoke to him briefly. He's a little jam packed at the moment, which I can't blame him for. The one thing that he mentioned, and I brought this up last night, Joel.
You did.
I brought
credited Dennis, and
no,
I should have credited
we
you.
were texting last night about the Elon Musk thing, and I said, "Is this his Jeff Skilling moment?"
Yep.
Because remember they were on an earnings call. And I forget what the question was, and the response from the CEO was, "Thanks a lot, asshole." so that was the response, and so anyway, just wanted to bring that up.
I mean, it's very telling, and I just don't think that I don't think he's going to be on any more conference calls. But mark that down, and it's funny because in our text you mentioned, I thought Dennis mentioned it, but you mentioned it. Even though you were just a little yipper back then. And
I was still in diapers.
Yep. It's relevant. So let's watch the trading action. I'll just do a quick technical on Tesla today. I don't know where Raz is. Maybe we need to talk to him. You're trying to make a bottom 277 even. What did I say I was looking for? I was looking for those lows at, where are those lows at? 277 and a quarter, 27. There's a big level. Getting a bounce, $2 above it. Look out below 277 in Tesla.
All right, folks, this is going to wrap it for us today. Hope you all have had a good morning and hope you have a good rest of your day. We will see you folks on Friday.